The all-important first quarter GDP numbers are going to be announced today at 5:30 p.m. The CNBC TV18 poll shows that economists expect the growth to come in at 6.8%. Now, remember, the Reserve Bank's forecast is 7.1% in the first quarter, but quite a few economists whom I polled were a bit skeptical because the government spent less during April, May, June. Those were election months. And it was also an unusually hot summer, an El Nino summer. So a lot of services could not be offered with the same gusto. But to give us more color on what to expect and where should we train our eyes when the big numbers come, I have with me Pranjul Bhandari, the chief economist from HSBC India, and Nikhil Gupta, the economist from MOFSL, Motilal Oswal. Pranjul, Nikhil, thank you very much for joining. Pranjul, you wrote an excellent report on how, GDP actually moves with the amount of heat, or rather weather conditions. So would you be would you be a bit worried about the number in the first quarter?
Yes, absolutely. I think the number will be closer to about 6.5% GDP number. And three big reasons. One, that elections quarter, the government was not spending that quarter. Second, real bank credit slowed in that quarter from 15% to 12%. And third, and most importantly, was the heat wave, a very debilitating heat wave over March, April, and May, I think, which was at the heart of this quarter. Now, as we wrote in a report yesterday, we are finding that temperatures are becoming a much bigger driver of agricultural growth, rural incomes, food inflation, compared to rains and reservoirs. We are all tracking rains. We track it on a weekly basis, but actually that doesn't really impact inflation or agricultural growth that much anymore. And the reason being that irrigation facilities are helping us tide over weak rains. But there is no such magic wand for temperatures. And it was a quarter of very high temperatures, and I think we'll have very low numbers on the back of that.
Okay, so 6.5. Nikhil, what are you working with? And of course, you can bring to bear a lot of the EBITDA numbers of the companies. What is GVA? It is EBITDA only. And, the other thing I wanted your comment on is also US GDP. It's been upgraded to 3%. How does all this impact your number? I think you're on mute.
Yes, sorry.
Okay.
Good morning. Yes, so we are also penciling in real GDP growth of 6.5 to 6.6%, with the GVA growth of 6.2 to 6.3% for the first quarter. We were expecting the same kind of growth a couple of months back, in fact, 1 or 2 quarters back as well. We have always been of the view that FY25 full year will be closer to 6.5%, and 7% looks very unlikely. Several factors have contributed to this belief of ours. First of all, we are of a very firm view that FY24 was a very exceptional year. The deflator played a very important role in pushing real GDP growth much higher. Itself, the manufacturing sector, where we saw very strong growth last year, which pushed GVA growth higher and the GDP growth higher, we don't see that repeating. Manufacturing sector itself, we believe, would take off as much as 1 percentage points from real GVA growth this year. That is one of the key reasons why we have always believed that FY25 growth will be much lower than FY24 and what the market is projecting, which was close to 7% a couple of months back. As far as US GDP growth is concerned, yes, US growth has been very strong. It has been strong. I mean, it has been revised upwards, but generally for the last 5 to 6 quarters, it has been much stronger than what anyone was anticipating. Same was the case for India as well. I would be very surprised if we see real GDP growth of close to 7% in Q1. I think Q1 will be the first quarter in many quarters when the actual print would be lower than what the market consensus and the RBI forecast is.
Okay. Well, the Reserve Bank sounded very confident even in the post-policy deliberations. The off-the-record comments were also very strong. They were worried, they said, in the first half of the earnings season. But by the time the full earnings season was over, they were more confident that corporate EBITDA is very strong. So they're putting their bets on 6.9. I mean, very, very close to 7, if not 7% itself. But Nikhil, this subsidy, okay, Pranjul, the subsidy issue, it is still possible that the states declare much or have actually given lower subsidies, and therefore we are likely to see, the GVA growth closer to the GDP. You think we are dabbling in something we don't know over there?
Yes, I think so. I think this big gulf between GDP and GVA, which is, taxes net of subsidies, that was a wedge of 1.5 percentage points in the last quarter. My sense is that a lot of it was driven by the fact that fertilizer prices fell very, very, very sharply. And on the back of that, the subsidy bill fell. What we've seen in the June quarter is fertilizer prices stabilize a little bit. And so my sense is that the wedge won't become any wider at this point of time. But, it will still be a substantial wedge. I would say anywhere like, close to about 0.5 percentage points, but lower than the 1.5 percentage points that we saw last time. But this is generally a problem with GDP accounting. We have a lot of issues where we are not able to deal with a good quality price deflator, especially in NIT. And that's why I would always recommend looking at GVA more than looking at GDP, at least at this point of time.
Yeah, fair enough. There are all those complaints about the deflator and about subsidies. And there was even one economist who said he expects the GVA to be higher than the GDP. He was not even ruling out that possibility. Okay, Nikhil, what would you watch out for in terms of, private consumption has been a disappointment all this time, but we are told that rural recovery is very much visible. FMCG companies said that. So can you give us a little more granular data on what are you expecting on private final consumption expenditure, private capex, if it has picked up?
Right. So on consumption, Latha, we are expecting closer to 4% growth in real private final consumption expenditure.
Oh.
4%.
Okay, but that's just as bad as last year in that case. I mean, the wedge between GDP is running around 7%, and for that, a consumption of 4% is a big wedge, which we saw last year. You think that continues? You're not seeing improvement?
At least for the first quarter, yes. So last year, again, we know GVA is a bottoms-up estimate, and GDP is actually arrived from headline GVA, and that's why we have such a large discrepancy. Discrepancies accounted for as much as half of GDP growth last year. So yes, FY24 was exceptional in that circumstance as well. And yes, although there has been a lot of talk about rural consumption, our estimates suggest that the decline in rural consumption was lesser in the first quarter, but there was still a weakness in rural consumption. Urban consumption growth, on the other hand, grew at a slower pace. So overall, that is what made us believe that real private final consumption growth in Q1 could be similar to Q4 or what it was in FY24 full year as well. That is one. Second, government private expenditure, private capex, yes. So we are seeing recovery in private capex. Again, I mean, we don't. Corporate capex last year was very low. The growth in corporate capex was very weak. We are hoping that would not be the case this year. Government capex, on the other hand, was very, very strong last year. We know from the budget estimates that is not going to be the case this year. So it is very likely that government capex will be offset by corporate capex this year. So we could see some shift in terms of private capex growth looking better than government capex this year. But again, overall investment growth, overall manufacturing growth, we are seeing real growth to be lower than last year because deflator played a very important role in real growth last year. Nominal growth, on the other hand, we are hoping it to be much better than last year. I mean, nominal GDP growth last year was 9.6%. We are expecting it to be closer to 10.5% this year, partly supported by higher investment growth and higher manufacturing sector.
Yeah, that's the budget expectation as well. Pranjul, can you just advise me what are the numbers we should watch out for? What are the numbers our viewers should closely watch?
Yeah, look, I would really be watching out for this whole consumption versus investment debate, where we've had a strange situation in which consumption has been extremely low, investment has been relatively high for the last several quarters. Is there going to be any change in that? I think that's one thing that I'll watch out for. I would love to see some increase in consumption, because over time it can drive even more investment. So that is one part I would, want to focus on. The other, I would want to focus on agricultural growth, because on the one hand, quantity of produce is falling because of heat waves, but on the other hand, prices are rising. So on margin, what really happened? And I think that will be a good indicator of where rural demand could be in the next couple of months. So I would look at agriculture carefully as well. And then, of course, public services is another important player, because, how much the government is spending on capex versus revenue spending. So what we see on the GBA side between construction and public services, I think that will also be an important indicator on what the government is prioritizing. So I would look at these bunch of things, but I think the consumption investment debate will be the most important one to watch.
Okay, yes, it's about time consumption picked up, didn't it? Nikhil, final thoughts, any one or two numbers which we should highlight? And secondly, what's your full year number?
So full year number, Latha, is 6.5% for real GDP growth, 6 to 6.1% for real GVA growth.
Okay.
Again, the numbers to look out for, of course, is consumption and investment from the GDP perspective. From GVA side, we need to be very closely looking at what is the agricultural sector growth. A lot of workforce depends on the agriculture sector, so it is important to note what is happening in the agriculture sector. Apart from that, manufacturing sector is what we will be looking for. And lastly, I always look very closely about this. One component of the services sector, which is community, public administration and defense sector, because that includes a lot of informal sector or unorganized sector, or a large part for which you do not get too much high frequency data.
The last one, you mean the public administration, defense and other personal services, that one? Okay. Okay.
Right. So it includes government expenditure, but it also includes a lot of other sectors.
Other personal services. Okay, fair point. And
yes.
Pranjul, finally, what's your full year number?
Yeah, just under 7%. And what is baked into that is that while this quarter will be rather weak, we think growth will pick up in the quarters going forward, the next 2 quarters, because the heat wave has abated, the government has started spending, liquidity is much more easier now than it was about 2 months ago. So weak growth in June, but after that some pickup. So overall, growth being just under 7% for the fiscal year.
Okay. Thank you very much. That's the expert view. More likely to come below our poll at about 6.5 and 6.6 is where Pranjul and Nikhil stand. 6.5 actually, to be precise. I'm going to give the non-expert view. My view, I think, is it's going to be pretty close to 7. But let's see. This is just a toss of a coin, and we will know at 5:30. Thank you very much, Pranjul and Nikhil, for sparing time for us. We'll touch base with you after the numbers come. That's it on this edition of It's the Economy. After a break, Chartbuster.